The following is for anyone who has or may ever get a mortgage, especially those 12 million Americans with adjustable rate mortgages. According to a government accounting office report, as many as 1 in 4 people who have adjustable rate mortgages may be getting billed the wrong amount. Some too much, some too little. But in any case, it's enough to make you sit up and wonder, am I paying the right amount? And how can I tell? For this, we turn to Neil Bader, a mortgage banker and manager of Skyscraper Consultants here in New York City. Good morning to you.
Hi, Katie.
Now, these errors, Neil, were discovered in routine audits of failed S&Ls, but experts say healthy institutions can make mistakes as well.
Well, keep in mind that an adjustable rate mortgage is a very complicated instrument, and depending on what part of the country you're in, there are adjustable rate mortgages that are actually adjusted anywhere from on a monthly basis to an annual or biannual basis. And because of that, the amount of calculations that go into figuring something like this out are really astounding. Some of the reports that I saw indicated, and it was even a surprise to me, that a lot of the banks, especially in the Midwest it was mentioned, are actually doing this by hand. And to tell you the truth, 1 in 4 actually seems like a low amount if you consider trying to do these type of calculations by hand.
Let's backtrack just for a moment. First things first, just explain quickly what an adjustable rate mortgage is.
Well, basically, the mortgage world is divided into 2 types of mortgages. You have adjustable rate mortgages and fixed rate mortgages. A fixed rate mortgage is one that has a constant term. So the rate that you take the day that you take out the mortgage is the rate that you get when you finish the mortgage, let's say 15 or 30 years later. On an adjustable rate loan, and there are a number of different types of adjustable rate loans, you can have it adjust anywhere from a monthly basis all the way to, let's say, a 3 or a 5-year basis.
What kind of formula, Neil, is there so you can determine when your adjustable rate mortgage changes, and what do you need to know to make those calculations?
Well, that's very important, and the big problem, I think, when people take out adjustable rate loans is they don't actually understand what determines the real rate of an adjustable rate mortgage. And what we have here on the board is I put together just a simple formula that I think should help people, and this is for people that are shopping for mortgages or for people who now have them and they want to see if they have a mistake on their mortgage. But the key thing, the first key thing is the index. And basically all adjustable rate mortgages move up and down based on the movements of an index. Now, basically, even though there are probably 10 or 15 different indexes around the country, most mortgages are tied to either the 1-year Treasury bill index or to something called the Federal Home Loan Bank Board 11th District Cost of Funds. That's primarily used on the West Coast. Now, on top of that index, you're going to have a profit margin. Let's just take, for example, and you can look in today's paper, you can find the indexes almost anywhere, but usually the local USA Today or something, or your local paper will have a copy of the 1-year Treasury bill or the cost of funds. Today it was at 7.24. Above that, the standard index, at least for a Treasury bill loan, is normally about 2.75. So if you were to take, let's even write up here, 7.24 plus 2.75, which is the margin above it, if you add those 2 numbers together, what you get is the actual rate of your mortgage, and it comes out to approximately 10% even. So 10% today, for almost anybody in the country who has a 1-year adjustable rate loan with a 2.75 margin, the real rate of their loan should be approximately 10%. Now, what people have to be careful of is if they look in the papers, or they walk into the bank, they're going to see an adjustable rate loan start at 8% or 7.5% or even 6.5% in some cases, but they have to be very careful to understand that that is exactly what it's called, an initial rate or a teaser rate. And the key thing is that they must look and they must ask for these 2 things.
Neil, what should people do if they feel they're being billed incorrectly after doing this?
Well, the most important thing, of course, is that they should first talk to the bank. And what I've found is that over the years, the banks are pretty sensitive to these types of things. And as long as they go to them and say it, I mean, I suppose if that doesn't work, and I think we may have some lawsuits over the next few years, but if that doesn't work, they could probably go to the State Banking Commission, and the banks are certainly sensitive to that.
Neil Bader, thank you so much for joining us.
Thank you.
We'll be back in a moment. This is Today on NBC.